So in this video, I want to talk about the new partnership with NIO Motors, and also I want to talk about NIO stock being downgraded at Barclays. So guys, NIO just partnered with NIO, which was formerly known as Jidu Motors. It is owned by Geely and also the Google of China, which is Baidu. So Baidu owns about 35% of this company. Very incredible, but this apparently is not the big battery swap partnership that the head of NIO Power has been hinting at. This is just a small charging partnership, and they're going to be using NIO's chargers. So that's very, very nice. This is their vehicle, GUS01, and it just really shows the importance of NIO's infrastructure. Right now, NIO has 3,747 charging stations with a total of 21,800 chargers. And then on top of that, they have 2,397 swap stations. Okay, so in total, NIO has over 6,000 units of infrastructure, all right, charge and swap stations. And that just is 3 times higher than Tesla. It just shows that everybody eventually has to work with NIO. NIO is becoming the global powerhouse when it comes to energy replenishment, whether it's charging or swapping. NIO is number one. All right. Now, Jidu Motors used to be owned 55% by Baidu, the Google of China, and 45% by Geely. However, Baidu does not have the qualification to manufacture cars, so they reformed the new company called Jiyu, which is 65% owned by Geely and 35% by Baidu, so to solve this restriction problem. So still, it's also a very important company for Baidu as well. It's one of the Baidu's most important companies, but Baidu cannot make cars, so they have to partner with Geely to make this car. So in a sense, it is essentially Baidu also partnering with NIO. All right, now let's talk about NIO stock being downgraded at Barclays. It really shocked the stock price yesterday. And first of all, it's very important to note that Barclays are actually short the stock. All right, they are short with put options. So here you see Barclays as of 15th of February, they bought put options on NIO stock covering 545,000 shares. So this is quite crazy. They also actually also own stock. So they own stocks. They own about 1.8 million shares at about $16 a share. But then they also bought put options covering about 545,000 shares of that. So it's very important to note they are a long holder, but they are also, buying some put options, which is sort of like shorting the stock. All right. Now let's see why they issued this warning. Why did they say, hey, sell NIO stock? What's going on? So the analysts see more downside risk. And so this article right here doesn't really talk much about that. It says Morgan Stanley just maintains the $10 price target. But here, Barclays did not share the same view, downgrading NIO to a price target of $4 from $5 per share. They said weaker March sales suggest NIO's trouble in selling its 2024 models. Guys, I cannot disagree more with this. All right, the deliveries, all right, have not hit in yet. All right, we're seeing deliveries creep up from 2,000 per week, 2,200, 2,300 to 3,000, 3,500. Last week was 3,500. It's growing. All right, the new policy adjustment is very favorable, and the deliveries are kicking in. And I actually got confirmation yesterday from the NIO manager that April is also going to be a very good month. It's going to be a decent month in terms of deliveries because of the new BAS policy is just so favorable. The inventory cars are being snatched up in 2 minutes, less than 2 minutes, it's gone. And last week when I was at another NIO store, I was eavesdropping and I heard a sales rep on the phone with a customer congratulating them because she managed to snatch up a car for that customer, and that customer was just overjoyed, like over the phone. So I was doing a little bit of eavesdropping, but this is the situation. They're actually doing good in terms of sales and deliveries, It's just not kicking in yet. And this month, April, is probably going to be over 10,000 for sure. Probably 15,000 or even more, 18,000 possibly. They have very strong orders, guys. Well, very strong orders. But here they said, with weaker than expected deliveries in March, NIO's Q1 deliveries came in line with revised guidance of 30,000 provided on March 27, but below its original guidance of 31,000 to 33,000 provided on March 5th, said Barclays. Importantly, the miss reflects weaker sales momentum of the new 2024 models, which were just launched in early March. Again, they launched the new models. All right, people's got to test drive it, and then it takes about 21 days from manufacturing to getting the car. It's not immediate, all right? It's not like they launched the car and then people get it right away. No, all right? So with all those promos, it takes time to kick in. With limited new product launches in the pipeline planned for the rest of 2024, we see significant risks for NIO's ability to meet consensus estimates for the remainder of the year. Well, there's the sub-brand car. Yesterday I talked to some of the sales reps, and they said the sub-brand car is going to sell like crazy. And also, they're also incentivizing a lot of good policies. They have good policies, and there's also a very big factor boosting sales. But that's going to be for my next video, which will be released in about 4 to 6 hours. So stay tuned for that. There's another big thing that NIO is doing, just massive, that's going to boost deliveries by a lot, and it's confirmed. Okay, looking at the longer term picture, Barclays believes the hyper-competitive electric vehicle market in China is set to become even more competitive. And yes, indeed, it is becoming very competitive. But at the end of the day, everybody else doesn't really have the moat that NIO does. Everybody else could be undercut. When the Xpeng G6 came out, everybody was saying, wow, this is so nice, so cheap for the specs, such a great car, 800-volt architecture. But then it just got undercut by the IM LS6, which was like a similar car, but even cheaper with even better specs. And now that car's not even doing that well. So it's just a matter of fact, all right? It's just after a few months, they die down. They got no competitive advantage. NIO has battery swap. Okay, for the segment which NIO competes, which is higher-end SUVs and sedans, Huawei has recently entered the market with a best-selling SUV and will soon launch a second model. And BYD's higher-end brand, Denza DE, continues to upgrade existing models and launch new ones, notes Barclays. Yeah, you spelled that wrong. It's DEN. Okay, so Aito has a lot of good selling hybrids, EREVs, the M7 selling very well, M9 also selling very well, but not pure electric. Okay, when it comes to pure electric luxury, NIO sells number one. Okay, price above 300,000 RMB SUV, NIO is the number one. All right, as a result, they feel that NIO now faces even more intense head-to-head competition with these strong and much larger competitors, and as a result, NIO may lack the necessary scale and resources to succeed. That is absolute BS. I do not agree with this. They have a ton of resources to succeed. Everybody is trying to partner up with NIO because of the infrastructure. The infrastructure is NIO's moat. NIO is also earning a ton of money from the infrastructure as well. So I completely do not agree with this. Larger competitors do not have the moat that NIO has. Look at what's happening with Hi-Fi. They are dying down because they don't have a moat. They're luxury, quote-unquote luxury, but no moat, no battery swap. It's just inconvenient to own. Nobody's buying their car. So NIO is, again, the best to buy. So ignore this. They just want your shares. And this is just more FOMO. Nothing like, this is not valid. These guys don't know what they're talking about. They tell you to buy when the stock is at 60. They tell you it's going to go to 80. When it goes down, they tell you, oh, sell. I mean, like, you should be doing the opposite of what these guys tell you. So, yeah, that's just my take on this. Do what you guys think is necessary. Obviously, the stock did not take this with too lightly. The stock is down in Hong Kong, and looks like market is going to open with the stock being down a little bit more. But, you know, I'm all in, and I believe this is just bullshit. These guys don't know what they're talking about. So, yeah, as always, stay safe, stay healthy. Peace out.